Last year, cybercrime cost the world somewhere between $9 and $9.5 trillion. Just in the US, the FBI logged $16.6 billion in reported losses from businesses and individuals. And that's only what people reported. The real number is probably much, much higher. Now, those are big global figures, but let's put it into business terms. According to IBM, the average cost of a single breach in 2025 was $4.44 million. That's what companies are actually spending to recover when something goes wrong. So the question is, if the risks are this high, how do you make sure your business is covered? The answer, of course, is cyber insurance. And today we're going to talk to an expert. Derek, thanks for joining us. Do me a favor if you would, and tell us why you're an expert on cyber insurance.
I've been with Hub International Insurance Brokers for the last 13 years. My latest title is Vice President, Technology and Cyber. Over that time, I've really dug deep and specialized in the technology and cyber space. So writing anything from a tech company to standalone cyber for multinational manufacturers, say, and sort of everything in between.
Tell our clients what is cyber insurance exactly? What does it typically cover?
Yeah, cyber insurance, it was really designed many years ago to cover data loss. And that has evolved into really driving coverage for extortion and social engineering type scenarios, which is, the most prominent losses that we're seeing today. From a catastrophic perspective, it's ransomware by a long shot. About 75% of all catastrophic losses are ransomware related. When it comes to most frequent losses, we're really looking at that social engineering component. So when we say that could mean a lot of different things to a lot of different people.
Sure.
But in the insurance world, we're speaking of you've been duped, or somebody on your team within the company has been duped into sending money to the wrong people.
Somebody got tricked.
Invoice fraud of some sort. Yeah.
Yeah.
And that accounts for about 30 to 40% of all losses. It's again number one in a frequency perspective.
So it's not some hacker in an elevator with a headset and glasses, and it's somebody phoning in and saying, "Hey, I just started and I need to get a password reset," or something to that effect.
It could be a lot of things, right? The losses aren't exclusive to the two things I just mentioned. We do see everything. We see the data loss. We see reputational harm type situations. There's lots of things that happen. It's just that really the sexy losses that make the news are the ones that are typically extortion based and where there's demands of $5, $10, $40 million being asked for. What kind of flies under the radar are some of the smaller losses that maybe just don't make the headlines.
So how much technical detail does a company typically need to provide to get cyber insurance?
It depends how big you are, quite frankly. So we have there's a threshold. It's sort of 50 million in revenue. If your company has under 50 million in revenue, usually the application is much shorter. It could be a matter of 5 or 6 questions. And a lot of those questions are, what's your name, email, like website domain, revenue, number of employees, things like that. So we aren't necessarily digging into, do you have a SIEM and SOC and, incident response plans and stuff like that, unless you're over that 50 million threshold. So the process can be quite quick and easy and painless for those that are a little bit smaller. It's a little bit more involved for the bigger clients, but they also have more to lose. So there's certainly going to be more questions involved.
Are insurance companies employing staff to investigate, to run checks against domains, to do some investigation on whatever is in the application? To
some degree, yes. So they're not going to come in and do a penetration test. They're not going to come in and make sure that you have MFA in place. They're not going to test that. But what they do test is your domain. So they will send sort of a non-invasive ping against your domain to see what comes back. And often they can glean information like if you have open ports, if you're showing open RDP, they're going to flag that and make you fix it before.
What's RDP for Tracy and Mississauga?
Yeah, remote desktop protocol. So it's an outdated form of sitting at home and remoting into your computer that's sitting at the office. So obviously that has been replaced by VPN, secure connections, but there are still companies that are using that outdated RDP technology, which is low-hanging fruit for a hacker that is ultimately deploying the same scanning software that these insurers are using. And if you're the unlucky one that shows up on their report, they're going to target you that day. And so ultimately the insurance companies are trying to head that off by beating them to the punch and alerting you so that you can take proactive action to get that rectified before it ends up leading to a claim.
Are there any security controls that a company can like actively put in place to give themselves a chance of lowering premiums in that like under $50 million threshold?
Yeah, we do. The market still is in a rather pass-fail environment, meaning that if you don't have certain protocols, you're probably going to see more declines than you would probably hope. But from a minimum threshold, perspective, we're looking for multi-factor authentication on all email access, all remote access, all privileged access. That's number one for sure. So most insurers are going to look down and see that you have MFA in place. And if yes, you'll kind of go on to the next step. If you are answering no to those questions, it might not be an outright decline, but you may not get as favorable terms as you would be hoping for. So MFA is definitely number one. After that, they do want to look to see that you have robust backups in place. Ideally that you're backed up in the cloud, that you maybe have offsite or disconnected backups. Just again, if you get hit with that ransomware loss, all of that could be encrypted. But if you have an air-gapped backup, it's an easy way for the company to get back up and running without having to pay the ransom demand. So there's little things like that they are sort of hoping that you would have in place. And that will certainly greatly impacts your ability to get to terms, depending if they are in place or not.
So that few $100s you might spend on an air gap, you called it air gap, which just means like it's separated by a bunch of air, right? Like there's a bunch of space between you and the last copy of your backup. Having that in place is the cheapest resolution to ransomware typically, right? Because it's not going to cost you Bitcoin to get it back. And even though you've been paying $200 or $300 a month, at the time, that's going to seem extraordinarily inexpensive.
Oh, big time. And you wouldn't believe, like I do get some chuckles out of some IT folks that I deal with because they're like, people still air gap backups. And sometimes this is the whole point, is that as technology evolves, sometimes we actually have to go back and in time and into a more secure environment. You can't necessarily just outsource everybody or everything to third parties because those third parties are susceptible, you're susceptible. Sometimes just going back old school and air gapping and going to tape backups is the safest and most effective way to prevent, these new attacks that are coming out.
From the insurance side, I would imagine that there are red flags that you can see right away. If either an internal resource that handles IT for a company or their IT provider, maybe that's a third party, I can imagine you can tell pretty quickly from the application, like they're doing enough or they're not doing enough. What are some of those red flags that you might run into?
Yeah, you can definitely tell the sophistication pretty quickly based on their struggles to even fill out the document. Often then, I might need to come on a phone call and sort of clear the air with respect to what the questions are actually seeking. But that said, it comes back to what I mentioned earlier, which is, multi-factor authentication, backups. Do you have potentially an incident response plan in place? Are you training your employees? So employee training is certainly a big one. There's, many different programs out there. One of the most popular ones is a company called Know Before. They have some great tutorial videos.
We did a video on Kevin Mitnick recently.
Exactly. And that's somebody that Hub uses internally for our own training. And you get these little tutorials that just, continuously educate our employees on what to click, what not to click, how to verify, things like that, just to keep it top of mind. Because in our busy days, we're so busy clicking and opening and closing attachments and things like that, quite often we can just get into a habit of opening things without double checking. And so it's, again, coming back to basics, remembering, that we're a human firewall, and the more that we can protect our business on the front end, obviously on the back end, they're going to be very thankful.
How do you see cyber insurance evolving over the next 5 years? Is it going to become stricter?
That's a good question. I think that's the $1 million question right now in our industry, is we are in a very soft pattern. So if you remember back to the old days of 2020 when COVID started rearing its head, we went into a massively hard cyber market. And what sort of led to that was just a dramatic uptick in claims. I remember, I think it was Q2 of 2020 or 2021, something like that, where the loss ratio for cyber insurers in Canada was 500%, meaning they were paying out $5 for every $1 they were collecting. So not a great way to run a business, as I'm sure all your viewers would attest. So ultimately what changed were security protocols went up. So they needed to have MFA in place. They needed to have some of these things that we've talked about. Premiums went up, deductibles went up, coverages were shrunk, limits were shrunk. And now we're sort of at the flip end. So it obviously ebbs and flows as the insurance market does, whether it's property or liability or E&O or cyber. These things all ebb and flow. So right now we're in sort of that bottom soft market where we're telling our clients it's a great time to buy. If you don't have a policy yet, it's a good time because pricing really hasn't been any cheaper. Are we destined to go back up? Probably, because again, we are naturally going to see these ebbs and flows. What's going to make that happen is claims. So the claims have traditionally not gone away. They've been there. We're maybe not hearing about them as much in the news, but they are still persisting. The reason why the market right now is so soft and why pricing has come down is because there's a dramatic amount of capacity that has entered the market. So for instance, if you're in that range of over 50 million, we might have had maybe 10 markets that we would go to previously to seek quotes. Now that's about 30. So when you have 30 underwriters coming in and trying to win market share, it's driving premiums through the floor. So despite claims persisting and losses mounting, we're seeing this weird market where we just have more capacity than we know what to do with. And that's obviously a good news for our client because they're saving a lot of money and getting a really robust policy.
Okay, last question. For small and medium businesses, what, if any, misconceptions do you think that those businesses have around cyber insurance?
Yeah, I think number one is we're too small. Like no one knows who we are. Why would they target us? So we're not Target, we're not Home Depot, we're not some of these other brands, even like a London Drugs who got targeted. You know, why? Or WestJet, who just, most people got the WestJet email a few weeks ago, signing them up for credit monitoring services if they wanted it. And yes, that's true. They aren't the big people, but coming back to my previous comment about hackers scanning the internet, looking for those open ports, think of it this way. So this is the analogy we always give: is a hacker is like a robber who's out there in the community, and they're just jiggling door handles, whether that's your car door or your front door to your house. And unfortunately now with Ring doorbells, we see that all the time, right? Because they're all getting recorded now. What's happening is if you're the unlucky one that gets their door handle jiggled, and you let them in because you've got that open port or you've got some sort of easy access, so they're going to target you. Whether you're Target or whether you're a mom and pop shop, they're going to go after you and see what they can get. It's very economical for them to launch these ransomware attacks and phishing emails and things like that. And so they will target anybody they can get their hands on. So obviously the small guys, they don't make the news, but we've cut many millions of dollar checks to small accounting firms, small this and that, because their businesses have been devastated by these claims. So big or small, it's definitely important. The other thing I would mention is that some people say, well, we don't have much risk because we outsource all of our data and all of our important functions to the cloud or to third-party providers. The issue with that, again, is that this policy will cover you no matter if you are hacked personally or if the third party that you rely on is compromised. So there was two really good examples of that in the last year. We saw CrowdStrike, the big security vendor, pushed out that faulty upgrade, and that crashed a lot of the big clients of theirs around the world. So that's what we would call a system failure type loss. The client had nothing to do with that, but they were dramatically impacted by that loss. That was covered by a cyber policy. Locally here in North America, we saw a company called CDK, which provides dealer management systems to about 15,000 auto dealers in North America. They had a ransomware attack. And so none of these auto dealers in North America could operate because everything they do, selling cars, service appointments, everything runs through their dealer management system. And so with that offline, they went back to pens and paper and were trying to track auto sales and appointments and things like that. It was an absolute disaster. And again, another good opportunity where one of our clients and insurance companies cut $1 million check, and it was actually just delivered a few weeks ago. So those are two scenarios where it was completely out of your control. You're sending your information to a trusted vendor. They have the issue, and now you're suffering as a result.
That's the stuff that makes me lose sleep at night. I can tell you, like, if we work very hard on our cybersecurity because we deal with so many different various customers that we're taking care of their data and their information. We have access to privileged stuff that we obviously have to take that very, very seriously. But what if one of those third-party vendors goes down? That's the stuff that makes me absolutely lose sleep at night. Derek, I really appreciate you taking the time to answer all these questions. Your answers are so insightful and great. Thanks very much.
Yeah, happy to help. Thank you.
So here's the key takeaways I got from my conversation with Derek. Number one was the main things they're looking for are multi-factor authentication, a good backup disaster recovery plan with some sort of offsite backup, and staff training. Number 2 is you're not too small. They're cutting million-dollar checks for mom and pop shops, and it's not always because of something that the mom and pop shop did. Sometimes it's because they're using some third-party service that got hacked. And the third is it's a soft market right now. The cost of cyber insurance is quite low, and it's a good time to buy. So if you're interested, you can reach out to me and I can put you in touch with Derek.